Hey traders, welcome to Profiling to Profit, the week ahead in futures. It is November 27th, 2016. I hope everybody had a great week last week. If you were in the US, I hope everybody had a wonderful Thanksgiving. If you're not, hopefully you got some time away from the screens, which is always good for you, and just enjoyed some outside time, some family time, recreation, whatever your desires are. I hope you had a good time at it. Coming into the week, we've got some changes happening as far as the markets are concerned. We're going to take a look at those. But first, let's get over to the economic calendar. Take a look at what's happening here in the U.S. Not a lot other than some Fed head speakers are happening, and by now I think everybody is ignoring the Feds because they're all just contemplating and talking about what they should do, should have done, and maybe what they'll do in the future. The big number this week is going to be the employment situation in the U.S. That's non-farm payrolls. Keep an eye on that. Of course, as we get down into the deeper part of the week, Thursday may be a light week because we have the employment situation coming out on Friday. And you know, as we move further along in the new administration, this number may become a bigger number. It already is a big number, and we do see some movement from it. However, the most recent numbers have not made them, it hasn't moved the needle on the market at all. But I suspect as the Trump administration starts to gain more power and control here in the U.S., I would suspect this number will be watched closely. Also, we do have the EIA petroleum status report on Wednesday, but that also crosses with OPEC, and let's talk about that here real quick. First of all, let's take a look at the international news. We have Draghi speaking on Monday, and then Wednesday. And this is what shocks me first. We have CPI out on Wednesday from Europe. Again, Draghi speaking again on Wednesday. Nothing else on Wednesday. But here's the funny one on the OPEC meeting. For crude oil traders, OPEC meeting is Wednesday, and this shocks me that this isn't red or double red, because this will definitely make crude go wild, and it already is, and we're going to discuss that when we look at the crude chart. But you know, if you're a crude oil trader, you have to know when this meeting is. There's just no ifs, ands, or buts about it. All right. Thursday, retail sales for Switzerland, and then of course ISM manufacturing, US, not a big deal. CPI out of Euroland, and then of course the non-farm payrolls in the US. All right, let's go hit the charts here real quick. Let's start with the NASDAQ as we do every week. You know what? NASDAQ just floated upwards. We said we had this zone here. It was a little bigger zone. It floated up over this zone, and it has balanced there. I redrew this zone after some calculations. It's 4830 down to 4800 even. We want to see this hold if there's a chance of getting to the new highs and breaking new highs at 4911. We think there's a good chance of this now. The path of least resistance looks like it's to the upside. Why do we look at that? Two reasons right now. The ES is the same way. The ES floated up all week and closed on its, I think it's the high tick. Yeah, I think it is the high tick for 2211 new highs. The NASDAQ, let's go back and take a look at that real quick. NASDAQ has not made those new highs. Okay, you can see here we pull back a little bit, and then we go over to the ES. They have made those new highs. Now we're holding on the ES. Our zone is a little bit lower. We just want to be a little bit more cautious in here, and we couldn't really calculate a good zone above to get long this market, so we may not be able to get involved with the ES. There's a chance to get involved with the NASDAQ. The zone down here for the ES is going to be the same one we've had up at the 2164 area, down to the 2150, 51 area, and the ES. That's a little bit of a pullback. If this pull back, the NASDAQ will probably blow through that zone, then we'll have to find a new one. But the other reason that we're seeing a NASDAQ that could start to head up a little bit further is because of this. This is a Russell. We've had 1, 2, 3 straight weeks up, and you see there's not a lot of red candles in here. This thing's been on a tear. There's a lot of money moving into the small cappers right now, and whether you agree or disagree with that, it doesn't matter. The bottom line is this thing's on a tear. If you are long this, we are not. I'd say congratulations, because you had a phenomenal trade. We do have a zone down here, the 1280 area down into the 1260 area. That's a buy zone for us. If it gets down below that zone, then this thing could run back into the range here. I don't suspect that will happen. I'm just hoping for a pullback into this area. We'll watch it very closely, but nothing we can do until then. All right, let's move on to crude. All right, crude, as I had mentioned earlier, we have OPEC coming out this week and meeting. There is a lot that is a fractured organization right now. The countries are trying to get their own power so they can control their own destiny in oil, and it's not working very well. The Saudis, there was rumored that they weren't coming to the table on Wednesday to talk. They were going to turn their backs on OPEC. OPEC is not what it used to be, and they're and let's think about why. Well, they failed to cut production into the marketplace. What is that, over a year ago? And we've seen oil prices slide, and they've stayed low. And the Saudis they got hurt. In the Middle East got hurt on that because their budgets are wrapped around oil at a certain price, and some of these countries are underwater right now because they can't make budgets. So they're not playing the game right now. So it's an interesting times in oil. Now, do you need to know all that? No, you don't need to know all that. What you do need to know is you need to know that OPEC is meeting, and where they're going to determine whether to cut production or hold production steady, and that will have an effect on the market, especially crude. So we have to watch that. There is nothing to do until after that meeting. To jump in front of that meeting is literally jumping in front of a truck running about 80 miles an hour. You are definitely going to get hurt. And we saw it this week. We saw a few spikes and then a quick sell-off based on the Saudis not wanting to come to the table, or a rumor of it. So there's all kinds of stuff, and I suspect there'll be some more rumors prior to the meeting. So we're going to avoid crude for now. Just know that it did move back into the zone here, the sideways zone we were in for a while until it broke out. And at this point, we don't care. Because we're going to sit on our hands until after that meeting and watch it. And then we'll try to find a zone and a direction. We should have some good direction after that meeting. We should be able to find a decent trade in there. But for now, we will avoid crude. Let's go over to Goldie. Gold is falling out of bed. There's just no way to really describe it other than it's falling out of bed. Dollar power is the name of the game here. Is as long as the dollar rises, gold will roll down and go. Now let's go take a look. I didn't plan on taking a look at the dollar index, but you got to take a look at it. I mean, this thing's on a tear. I mean, there's just no way other to describe it. This thing's in fuego. And will it make new highs? People say it will. People say this thing's got a long way to go. I'm not in the prediction industry. All I know is that the effect it has on different products, and gold is one of them. And so if gold's falling out of bed, and we can't get short down here at these bottoms. It barely had a bounce on last week, I guess on Friday it was when it traded. Our zone was up here to get short. It did not. Didn't even get up there. And just understand how gold works. And this is a good lesson that we can look at. When gold moves, it doesn't bounce right away. It usually just goes in a tight sideways formation. We like to look for a bounce. It's a better trade up there. We saw a tight sideways formation, and we saw a quick break, and then a sell-off again. Here we saw the move sideways, move down, sideways, move down, and again sideways here. We're not willing to sell it down here. We did break through our first target at 1209 if we would have gotten short up here, which we did not. And then the next target on board here is 1154. So that's the next magnet down here. We are going to maybe look for a zone below to get long. We're going to leave this zone up here to get short because we suspect the first time it tests up here there'll be some resistance. But this is a long way and a long move here. The dollar would have to actually pull off its highs pretty big for this to get a bounce up into here this week. But we've seen crazier things. We'll keep this zone up here for now. But we may have to put a new video out this week if something happens, and we will. So, all right, nothing to really do there until that happens. Let's go look at the euro. The euro is the exact same as gold. It's gap down, big week down, sort of a double distribution here. We did break that level we were looking at, and again, guys, just look on what we had to do here. This is another great lesson. Let's go to the daily chart, take a look at this. This thing went sideways for how many weeks? It was crazy. Then we saw the opportunity to finally sold off, and we said, listen, if it breaks these lows down here, there was a great opportunity that was going to go down and test this lower support area. Not only did it come down, tested it. If we go back and go to the 2-hour chart. And by the way, just as a reminder, guys, these are weekly profiles over here with 2-hour candles. These obviously are a longer term profile here. So it came down and it just tested this area, just sat there for a few days, and then of course rolled over, and when it rolled over it just blew it out. Now it came down to this level and has bounced off that level, and then we suspect it's going to have a chance at that excuse me, that 104 or 5 area. That's probably the next target down below. We're going to keep this zone up above here, the 107.04 up to the 107.55 area. This is a zone, if we do get a small bounce back into this resistance, we think we could roll back over and then get that one. That would be a great trade there. But for now, until it happens, no short, no long. And of course, Draghi speaking, and whatever comes out of his mouth may have some effect on that. And also, I would say the dollar is having a huge effect on this right now, obviously. All right, let's get over to the bonds and notes. Bonds and notes, same thing. Bonds and notes, they say this could be the end for bonds and notes for a while. Even if it is, there's going to be some trades to the long side. We are inside our zone right now that we identified. We will watch for our trigger now to get long into this zone. If we do get long into this zone on our trigger, the first target is 125.31. Second target is the gap fill at 127.04. We think this could happen as long as we hold below or above this 124.16 area. I think we have a great chance of that bounce happening. Same thing with the bonds. However, the bonds touched our zone, or came right up to it and gave it a little kiss, and then decided to take a bounce off the deal. We're hoping that the bonds make one more attempt down into the zone, so we can find a trigger to get long in here. We'll have to watch that this week. This is a nice opportunity. If you're a bond trader, keep your eye on this zone, and remember, if you don't have a trigger, do not trade it. It's not worth it, or at least know what your trigger is and use that. All right, let's move over to corn real quick. Again, another great lesson on areas and levels. Obviously, this 345, and you've heard me say this I don't know how many times, but the 345 level has been very important in corn going back into July. We made the low back in July, and then we blew through that level, which became resistance. It hit it, came up to it once, it came up to it twice, came up to it 3 times, it held it on a 4th time, a 5th time, it blew through it on the 6th time, it held it for the end of the week on a 7th time, and now we're sitting above it again. Somebody can tell me out there that levels aren't important and tell me why. I'm open to listening, but I'm here to tell you I've been in the markets long enough to see this a gazillion times, and they do work. And they are an area. That's why we look for areas. And I say specific level. Sometimes it is a specific level, but most of the time it's an area, and there's a reason we look at that. But nonetheless, we are above this right now. We don't see an area that it has good risk reward to get long in here. Now the beans are on a tear, and we're going to look at that in a second. But you know, corn has a chance if it wanted to get up into that 363 area. That is an area we're watching, have been. We thought it was going to happen when we got up here, but the USDA crop report had other plans for corn. But now that we're through the harvest season, I would say there's probably less than 10% left to harvest out there, if even that. So we should know what the numbers are. We know what the supplies are, and we're going to see if we get that after harvest bump up here at this time. Now, so with that, there's nothing for us in corn. We're going to watch and hopefully find an area, because at this time we do like the long side here. We think that there's some potential up here based on, you know, the post harvest time, and also we like what soybeans are doing too. And sometimes soybeans can make it pull corn up. Even though they are a different product and there is different supply and demand inside those products, but they are the grains, and psychologically when one goes up, a lot of times we see the other pop as well. Now soybeans had gapped up pretty big actually, and had a tear and finished on the highs up here for the week, and now we have that level up above here, that a 1055 level, 1056 area that we have to watch. It's not a line in the sand, I guess you could call it a line in the sand, but we think there's if that thing gets above this area, I think we have a greater chance of getting the 1076 and then up into the $11 area. We see no reason why that can't happen. We've been bouncing along the bottom here for many weeks. We poked down, took the bottoms out a couple times, and then rolled it up, found some balance, and now we're possibly breaking out here. The wheat, we don't trade wheat. We look at it every now and then, but wheat, you can see here, wheat is sort of going sideways as well, similar to what we've been seeing with corn. Wheat's got a little bit to go before it gets a breakout to the upside. We'll have to wait and see. I think the wheat harvest was pretty good too this year. Winter wheat has been able to get into the ground, so you know, the supply could be so much that the price won't bump at all on the deal. So grains are difficult right now to trade. I won't kid you. We got to find a good zone. There's an old saying that Jim Rogers says all he wants to do is go over to the corner and pick the bag of money up, and we agree with that. Right now I don't see the corner, and I don't see the bag of money in corn. Soybeans is the same way. I don't see it right now. There's an opportunity for that thing to move up further, but we need to find a defined risk area, which we don't have in the corn and soybeans. So we'll wait this week and take a look at it, see how the price action's working, do some calculations, and see if we can't come up with anything else on there. So with that, guys, let's head back one more time to the indexes here, and just remind you guys that, you know, if we push a zone out, just understand that you should understand how to get into your trade on this zone. And what I mean by this is a trigger. I've had a lot of questions this earlier last week and the previous week. I've had some questions come in about triggers. There's loads and loads of different triggers. I'll try to do a video. There is a video on our website, and I'll show you where you can find that about the triggers. But you have to understand it's part of your trading plan. If you don't have a trading plan on how you get in and out of your trades, then you probably need to stop trading immediately, put that plan together, and follow it to a T. See, trading should be boring, guys, and I know Matt and Josh have talked about this quite a bit. It shouldn't be the Wild West, and it shouldn't be a gunfight out there, and it shouldn't be, you know, exhilarating and heart palpitating and whatever it would be. But the bottom line is it should be boring. It should be redundant. It should be you know, you should know where you get in, where you get out, where your stop losses are, where your targets are. Those can be adjusted somewhat during throughout the trade, depending on the volatility, of course. But for the most part, you want to have it to where you know and what you're doing at all times. And the reason is because it's a plan to protect you from you. It's a psychological deal. So get your plan together. I'll try to make a video over the next couple of weeks here on some more triggers for you all. I hope you enjoy those. And again, if you want to look at them right now, I want you to go over to Market Profile Trading Academy. It's marketprofiletradingacademy.com. I want you to go down, I want you to go to the free resources to the right, top right. I want you to go all the way down to the bottom right to the video. Okay, and in this video we have all the webinars recorded. We have every week that we put this video out as well. And of course I have some other videos, and if you run through here, you have the videos of, you know, trigger video. I put one out and gave some examples of a trigger. I'll go a little bit more in depth on the next video. And then of course, always guys, give us a call, give us an email, go over to contact us. Yes, we do answer the phone. There's the phone number, 541-728-3217. You can either that or drop us a quick note in here. You got questions, we'll be glad to answer any of your questions, trade related, anything else. Can't fix your car, but we can definitely help you with your trading on that. So with that, guys, have a great week. Also, just a reminder, it is coming to the end of the month, which can make markets a little bit more volatile coming into that time, so be careful there. Other than that, have a great trading week, and we will talk to you next time. Thanks.